Hello and welcome to Big Deal. I'm Nisha Podar. Now, Ghar Wapsi theme is gaining momentum in the startup space in the midst of several headwinds faced by the new age digital companies. Now, Ghar Wapsi is essentially domiciling back to India those startups which are founded by the Indians operating in Indian market presently but incorporated overseas. So the economic survey this year had also paid cognizance to the onshore Indian innovation aspect with the concerted effort by the Indian government as well as the regulatory agencies. But this is not an easy structure, nor is it tax efficient. And the startups seek government support along with tax dispensations. So let's delve deep into this with the industry players. Joining me today on Big Deal are Siddarth Pai of 314 Capital, Mehul Bheda of Dhruva Advisors, as well as Dhiresh Bansal from Meesho. Gentlemen, so good to have you on CNBC-TV18. Dhiresh, beginning with you. Your company is amongst the many aspirants looking for a reverse flipping. So why does it really make sense now, and why this big change in strategy after several of the companies like Meesho just flipped overseas a few years back?
Sure. Thanks, Nisha, and thanks for asking that question. I think if you dial back about a decade or so ago and kind of look at the market that used to be present in India, both from a venture funding perspective as well as broader capital markets. At that point in time, Indian markets were probably not as deep as they are today. And that, I think, over the course of the last decade has continuously progressed. Now our domestic markets, both on the venture funding side as well as on the capital market side, are much deeper. We get close to about 15,000 crores in SIPs every month. And I think overall, the pool of liquidity on the domestic investor side, both institutional as well as retail, has increased manifold. As someone like us or others as well, there are about 20 plus of the 100 odd unicorns that are currently in India, which are incorporated outside. It is sort of a question that we think about, which is, does continuing to be incorporated in jurisdictions outside India kind of make more sense, or is there time to kind of come back? We feel now with the depth of the markets in India, what the capital markets can offer, the level of understanding of the domestic institutional investors, it is quite important to think about this as a very real option, as well as I think the brand awareness that a lot of the startups have now in India versus some of the overseas markets also makes it very important to tap into this kind of liquidity pool and also have the opportunity for the investors to participate in the value creation going forward.
Right. So, Dhiresh, I would only say that, it's a chicken and egg story when it comes to the Indian market, depth as well as acceptance of the digital companies. Some of the digital companies took that leap of faith in Indian market and they saw that Indian markets evolved with that trend as well. But I do understand that VC community for the longest time was waiting for an IPO opening for exits, which it was not getting earlier a decade back. Siddarth Pai, jump in on this. You've been engaging with the government on this particular aspect. You've written a white paper. What are the findings? What is the requirement? And does government view this as a homecoming or Ghar Wapsi, as we are really saying, or return of the prodigal son?
Nisha, that's actually a fantastic question. The Honorable Prime Minister has actually, I would say, evangelized the term startup and actually made it a household term as of now. In fact, the industry has actually dubbed him the startup prime minister, and startups have a very, very close place in his heart as of now. Now, unfortunately, a large amount of the reasons why startups have actually decided to flip overseas, which I've also covered in an article and several papers, have actually authored in that regard, actually relate to three broad reasons. One is with regard to operations, second is regard with the availability of capital, and the third one actually becomes tax reasons itself. Now, ever since 2014 onwards, the government has actually spent a substantial amount of time to actually rectify a large number of these issues that actually end up existing. And this has actually created a far more conducive environment for startups to end up coming back. As of now, there are still 3 or 4 large areas that the government needs to work on, and the entire industry bodies such as IBCA, ISPIRIT, the Association of CFOs of AIS, etc. Everyone's gotten together to actually speak to the government on this matter. The government's actually looking very intently on this particular issue. I think the reasons why startups decided to move overseas have actually reduced as the scope of time. And a number of startups who moved overseas actually realized there's no point being a very, very small fish in an extremely large pond, for that matter. Their market actually exists in India. The Indian media gives them a lot of credence when, in case you actually put their results. The Indian capital markets have also shown a large amount of acceptance for high burn companies, and they've actually given them premiums in their valuations also. So I think the reasons for these companies to end up flipping back to India actually remains very, very strong. And the government does create a scheme to allow them to come back. I think a large number of them will decide to actually come back to India and re-domicile to India itself.
Right. So that, to your point, I must also say just a few years back, it was not even when India was not getting VC funding, but just a few years back when government had proposed global direct listing, but it was in the back burner. At that time, also, a lot of companies desperate to go public in the overseas market had flipped overseas. And some of them may look at a change of strategy, and a bold one at that, in a matter of few years. But we'll delve deeper into what are the technical aspects of doing this, because it's a very big strategic change and also a big structural change, which is not tax efficient. Mehul, how would you summarize this? Are you spending a lot of time with the startups working on this structure, or is it on a standstill right now waiting for government's dispensations?
I think, there are a few structures which are possible. So no two structures are alike. So, one has to look at the facts of each structure and then see how to make it more efficient. See, one part is the process, right? How do you get the startups domiciled back to India? Because it's a huge change. And the other part is going forward, how does it work? So one part on the process, I think there could be a cross-border merger that you can do. You can do a, incorporate a new entity as a subsidiary of an Indian company and move the overseas business there. You can do a transfer of shares which was done in PhonePe. I think each of it has its own nuances, and one has to look for each of these problems and figure out a solution. Of course, if the government does something, it's always welcome because you will always find that there are some pros and cons of each structure that you go through.
Right. We'll discuss a little on the tax aspect with you, Mehul. But I want to ask Dhiresh. Dhiresh, is, Indian market, and most of the economists have also said, and market experts have said, that India will be better than, would still grow and will not fall as much as some of the Western markets would. Is that the big attraction for the startups to come back to India and try and list over here, because that particular pocket has already been created, and we have seen that the global investors don't shy away from investing in a digital company in India on the Indian bourses? Is the IPO and the exit mechanism still the biggest pull for this big strategy?
Sure, Nisha. I think there are a few different reasons, right? One, definitely there is, more liquidity available for new age companies now in the Indian markets, like I had mentioned earlier. But also, I think the whole fact around brand awareness, because let's say right now the market is such that Western markets might be somewhat kind of more negative than the Indian markets, but those situations kind of ebb and flow. So I think it is also about what is the natural destination for a company which has most of its operations in India, most of its assets, employees, everything in India, and the broader resonance of their kind of business is higher in the Indian markets. And that's, it is that which kind of makes someone like us or others as well to kind of think about India as a potential listing venue eventually.
Right. So that could be a very big pull. But Siddarth, does it work wherever your brand presence is, recognition is, and where the market is? Listing over there, is that the thought process, and is that what investors like yourself are also recommending?
100%, Nisha. I think it's very, very important for a company to actually be very close to its customers and to actually build the brand equity much closer to where the customers are, as opposed to choosing a domicile that's actually far divorced from their entire market, their customer base, their team, and everything that's there as of now. I think for public limited companies, and this is something that a number of startups who listed have actually learned, the bourses don't actually become the destination, they become the beginning of an entire journey. And the amount of marketing effort you put in as a public company is actually far more than what you put in as a private company. And the media plays a large role in that. Even some of the Indian startups who decide to actually list on either NASDAQ or the NYSE, when they release their quarterly results and everything for that matter, they get a lot more coverage in Indian media as opposed to getting any sort of coverage in foreign media. Just to put into perspective, the quarterly profits of Google or Alphabet is actually $50 billion a quarter. And some of the market caps of Indian startups have actually listed over there is actually a fraction of that. In the US, the simple rule of thumb is unless you have about a $50 billion market cap, most of the media won't actually give you any sort of credence or anything for that matter. So hence, I actually said you become a small fish in a very, very large pond. Whereas the entire market is here, there's a lot of comfort that's actually given to consumers who not only want to become consumers of these particular products, but also want to become shareholders as well. We've actually seen several of the D2C companies who listed in India. The greatest pull that they actually had from the entire retail population was because they were actually users of those products, and hence they want to become shareholders as well. That is a very important calculus that actually goes in, and a number of investors are aware of that, and they're actually encouraging their companies to start looking at this in terms of their exit plans and their IPO plans as well, to make sure they can capitalize upon that.
So what I gauge is a mix of the aspirational young entrepreneurs who want to make a name and not getting overshadowed in the US market. But I would say that the investors and the market had a lot to do because they thought that the valuations overseas was much higher, and now the Indian market is looking equally good if the valuations are put right, though the domestic institutional investors are quite critical about the valuation dynamics of the digital space. But we'll discuss more because on this subject, because Gift City, can that really see the tax-free transfer of some of the fintech companies in the startup space? Is that a possibility? A committee has been formed. We'll discuss that and more after a very short break. Stay tuned to Big TV. Welcome back. You're watching Big Deal, and we are discussing the Ghar Wapsi momentum in the startup universe. Now, Mehul, we were discussing, we do know that Gift City, IFSCA, has now come up with a committee to really look into this particular matter. Of course, in Gift City, only fintechs can be transferred, if at all. What do you have to say about the Gift City structure for a quick onshoring, even though it's an offshore platform? Is it the same as onshoring on India? What could be the difference?
I think what we need to understand is that, Gift City obviously provides a good platform. The companies that get incorporated there are treated as offshore companies, so they are effectively treated as foreign companies. So foreign exchange regulations don't apply to them. There are tax concessions given to those companies as well. But, in a typical flip structure, what is very important is that the shareholders, the founders, the promoters, the key employees, they are all outside India, because because from all kinds of perspective, whether it is tax perspective, POEM, FEMA, the general advice that was given was that they need to be outside India, or they need to be residents outside India, both from a FEMA and tax perspective. Right. Now, Gift City does not enable that, because the individuals still remain residents of India. If you move to Gift City, you don't become a non-resident, and therefore, that whole aspect needs to be figured out. Also, let's say if you are in Singapore or any other such jurisdiction, dividends, capital gains, they are exempt. Now, again, in Gift City, if you're a shareholder, those dividends, capital gains are not exempt. So, again, those issues, hopefully the committee will look at that and come up with answers.
Right. So, Dhiresh, practically, from the point of view of Meesho and many such aspirants who want to reverse flip, what are the biggest issues? Is tax inefficiency one of the prime hurdles?
So, Nisha, there are a few issues. I think Mehul mentioned some of the tax issues, but there are other things as well. So, for instance, on Indian bourses, an overseas incorporated company is not allowed to list, whereas that is possible in case of many other exchanges, be it US, Canada, Hong Kong, etc. So if, for example, there was a structure possible where companies which are incorporated outside India but have, let's say, a large portion of their assets, revenues, employees, all kind of based in India, be allowed to be listed in the Indian exchanges, that could be another way around solving this problem. And there would be many such solutions. But I would say, I think tax is one aspect, but there would be other solutions which might be possible, which do not kind of change the revenue of the government, but still kind of end up achieving the same outcome for players like us.
Right. So, Siddarth, what is the wish list from the government in terms of support as well as dispensation? And are they aligning with it?
I think the wish list from the entire industry is to ensure that from an operational perspective, there is no difference that happens from operating in India or GIFT as opposed to operating overseas. I think one of the biggest concerns of the industry from an operational perspective is the fact that a large amount of the billing actually happens to an automated fashion, and a majority of the income also comes from overseas sources. There are people in the US, Europe, Australia, etc. Unfortunately, due to Indian regulations, it's very, very hard to have a payment gateway that can accept money in USD in an automated fashion. You still have to go and actually submit a physical invoice, give them transfer instructions, source the bank account details, and a large amount of stuff. So if this inefficiency and friction actually goes away, I think it'll make it a lot more attractive for these startups to actually end up coming back to India itself. From a tax perspective, also, Gift City actually had a fantastic change in 2021, where they said that in case of an India-focused fund, you can actually redomicile back to India, to Gift City specifically, in a tax-free manner. If a similar kind of scheme has actually been extended out to Indian startups looking to come back as well, I think that'll actually be a fantastic shot in the arm for the entire initiative. Because if we look at it, I don't think every Indian startup can actually be like PhonePe to pay $1 billion in taxes to actually redomicile back to India. So a tax-free fashion to actually get them to come back will actually go a long way in actually making this a lot more attractive. Some of the other elements such as tax, etc. I think one thing that's actually weighing on the minds of investors from a tax perspective is if the majority of your business actually arises from India, and this is due to the Vodafone case that actually happened, if majority of your business or assets or the value of the securities arises from India, then no matter where you're domiciled, if you actually transfer securities or you sell your securities, tax is actually payable in India.
Yes.
So for all these Indian startups who are actually domiciled overseas, but the majority of the business and the value of the charge derives from India, if they do list overseas, this is a potential tax sword that actually hangs over the heads of everyone. If they move back to GIFT, or they move back to India, mainstream India, mainland India for that matter, that won't actually apply. So these are the factors that people are actually looking at. These are factors that the government has also appreciated, and there is actually deliberations that's happening across all levels to figure out a win-win solution to get Indian startups to come back home and to allow India to benefit from the kind of IP and the value generation that these startups are actually creating.
That's right. Owning our own innovation, IP, as well as data, that will be a big thing. That could be the pull. But is it an opportunistic aspect also from the startup world is what probably the government will look into as well. But Mehul, what is your reading on this? What are the teething troubles in terms of tax aspect? And in your view, can a dispensation be given? Because the transfer pricing aspect is also there, where any sale of share in an overseas jurisdiction for the assets inherently lying in India is going to be taxed in India, and that the Indian government has been extremely strict about. So, Mehul, how do you read into balancing of this tax aspect as well as owning and onshoring our own innovation?
Yeah, I think, absolutely right that there is an indirect transfer law which after the Vodafone case came into play. I think the ask seems to be, if you are an overseas entity, can you list in India? Probably the answer is no. So then can you flip the structure in such a manner that your overseas entity is not your holding company, your Indian company becomes your main holding company, and then your shareholding also gets offshored into that Indian company. I think that is the thing that people are looking at. Of course, there could be some tax issues, and therefore, gift city is an idea. Of course, it's limited again to fintech. The transfer pricing thing which you mentioned is interesting because a lot of startups, when they flipped overseas, some of them also sort of relooked at their business model, their transfer pricing model, and more profits, etc., were then, sort of ensured that they were parked overseas because that is your vehicle, right? So you need profits over there in order to make your listing over there attractive. Now, when you re-domicile back to India, do you then go back to a transfer pricing model which is cost plus or which is, more focused on profits in India? So do you change that? Again, that becomes a interesting thing. Again, as per an Indian tax laws, if you change the transfer pricing model, there is also an exit tax. So, all those issues, even in overseas, we are talking about Indian taxes. But when you flip the structure, and if your structure initially set up, let's say has a holdco in the US, for example.
Yes.
And if you want to flip it back, then there could be taxes in the US. And how do you deal with that? That also becomes a big challenge.
All right. So lots of challenges in this. Not an easy structure at all, and government dispensation will be very required. But an example has been set by PhonePe by paying over $1 billion of tax to reverse flip. So given that, whether the government will proactively give support to the rest of the startups needs to be seen very, very carefully. But of course, our panelists here have been working tirelessly with the government on pushing the Ghar Wapsi agenda as well. Thank you so much, Siddarth, Dhiresh, as well as Mehul, for joining in this conversation. It will go on. Lots of developments on this front is likely to happen soon. With that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.